Hello, my name is Ignacio Salazar. I am the CEO of Highfield Resources. In Highfield, we are developing the Buga project in Spain. It's going to become a 1 million ton MOP potash producer. And we are shovel-ready, all the permitting behind us, and just making a lot of progress on the financing to start production as soon as possible of the main facilities. Hi, how's it going?
Ignacio. Thank you very much, Ignacio. You were only on recently, but things have moved on again. Last time we spoke, you'd just got the construction license granted, which was a big step, but you've also advanced things on the money front. So can we just talk about some of the parties that are now involved from a strategic point of view, from a debt point of view, and what that's sort of doing for your balance sheet?
Absolutely. Well, just briefly on the license, the key element is that that was the last license or key. Obviously, there is a lot to do always, but the key license to allow us to construction. So that long permitting process is behind us, and the permitting risk away, and as I said, shovel ready. So very important. Now, from the point of view of the financing, this is probably a very good way to put it. We are really adding building blocks to or pieces of the puzzle here. Already for a while, we got committed and signed the 320 million euros project finance facility with I think the strongest banks or the leaders in this sort of loans, SocGen, BNP Paribas, Natixis, and ING. And in addition to that, and part of the exercise of syndicating the 320 million, we got recently announced two other banks, HSBC, very well known internationally, but very much driven by the Spanish office here, to join that syndicate. And Caja Rural de Navarra is not only Spanish, but Navarra, our region, where the project is sitting. Savings Bank is the bank who is financing and providing finance to farmers in the area. So I would say very much relevant to our business, no? So that together that strengthens and confirms and reconfirms these 320 million. In addition to that, a non-binding term sheet, and a lot of work has been ongoing with the Macquarie Bank. The non-binding term sheet is what we had, but again, recently we signed final documentation with Macquarie, expanded a bit, 23 million euros. Finally, we got up to 27 million euros of lease finance for mining equipment. So all of that is the 320 plus the 27 from Macquarie are already in place, and fully committed and signed with all these groups.
Right. So okay, the debt component we talked about last time, I don't think that was in doubt as long as you kind of hit the deliverables, right? With the equity, it leaves sort of another circa 120 or so, right? And I get that it'll be phased as well. So Macquarie is the first step in terms of the equipment and operating lease finance. You've talked about convertibles in there and as well. So there's a real kind of blended alternative financing on the equity front. Can you just kind of break that down for us? Because that's the expensive bit, I guess.
Yeah, no, absolutely, Matthew. So all of that has been, I would say consolidated, but a lot of work for quite a few months, and as well a lot of due diligence. I think it's important from that point of view. But from yesterday, that is the big news. Now is a convertible note that has been signed with EMR, private equity in Australia, very well known, obviously, and I'm a long-time supporter of the company, joined the company in 2014, and 27% shareholder, and another also long supporter and very active supporter, Tectonic, a smaller group as well based in Australia. So two key shareholders have provided the company yesterday, that was announced, a convertible note up to of 25 million Aussie dollars, 18 from EMR and 7 from Tectonic. And very, very important at this stage to get this support from these two shareholders. That will provide runway to get us fully prepared and ready for the construction of the main facilities. No.
Right, so that's sort of around $50 million level, and we need to kind of get up to sort of like 120. So again, how and when do you feel that that's going to come through?
Absolutely, because that money, this investment is strategic, obviously, by nature and the support of these key shareholders, but also, I would say, strategic in our financing strategy, if I can be a bit redundant on that, because there's been quite a lot of work ongoing with investors that could, from the finance side and from the business side, that could provide support to the final funding. And well, at the end of the day, we will go to the market with whatever is left. But with the license and the permitting risk behind us, that is obviously the opportunity to get good deals from our perspective with the strategic investors has clearly increased. And I think that this last support from the key shareholders is an additional support and endorsement to allow us to do this work properly. No? So
right, okay. But if I may, so what you've got is, and you've assembled a cast of the great and the good of the finance world, is an strategic offtake partner potential for you here? And again, so just trying to reduce the kind of dilutory component to funding this project through over the next 2.5 years.
Absolutely. So I like to split the strategic investors. No, we always talk about the strategic investors in two big groups. One is financial strategic, the other one business strategic. The business strategics, to start with them, is what you typically would be an off-taker that provides some additional funding to the company in addition to an offtake deal. We were very carefully managing our offtake deals up to this point. We have more than double of our production in non-binding deals, but we discussed this before, Matthew, that the strongest point of this company is the location and the access to the market. So for us, it's not an issue how do we handle and push the product away. It is, we see that as a real asset, and we want to sort of crystallize the value of that asset, signing an offtake with a strategic partner. And in parallel, we are running some other processes, what again I call financial strategics, are more the sort of debt type of structures as well, where we get, again, a strategic partner, but more from a purely financial perspective rather than a business partner.
Okay, so those conversations are ongoing. As I know you've delivered a lot over the last 6 months. Well, and before, but especially over the last 6 months. So jurisdiction, I kind of get it. Well located from multiple markets, and the transport costs are a big part of this. And being a low quartile producer, low decile producer is also critical to you. But you have got construction risk now. That's where you move through. It was financial risk before. Now it's construction risk. You've got the money. We're starting to put all of the money in place to be able to do that. I noticed you've made an appointment recently for that as well. Because you need to build a team out as well, and you're gonna have to build the team out quite rapidly as well. So can you just tell us a little bit what you're trying to do there?
Absolutely. No, very, very good point. So obviously we are looking at the construction of the main facilities. It's nothing that we take for granted, it's obviously all the effort and the emphasis has been on the permitting and financing, but we know very soon we are moving into construction. And for that, as you say, we hire, this is Carles Aleman, his former president of ICL in Spain. So he's a man with a lot of relevant experience, obviously, in Spain and in potash, both mining and processing in the plant, and marketing, by the way, also. So very, very relevant, working for us, as I said, from last week. Yeah, he's going to be in charge of the plant construction. So this deal with EMR and Tectonic, I think, is going to be key. These few months where we will finalize the financing pack, we are going to strengthen, as you say, we will move from a group of 30 people to an effort, obviously, with contractors close to 1,000, full construction. So that, I think, is going to be very important. We give ourselves the best chance We also optimize engineering. So we start construction. I mean, that is the way I like to work these things, with a few cards up our sleeve, because things are not going to be always running according to plan. So we are prepared for all contingencies. No, we feel that the amounts of money and the numbers we are, and because have been not only run, I think, very carefully by us, but sort of retested by our process with the banks, due diligence with them, due diligence with other companies, put us in a very good position also to manage the construction going forward.
Okay, and I think it's kind of interesting. Yes, you're getting the endorsement from strategic partners and financial partners, and potentially marketing partners too. So that's all very, very encouraging. But even they must be looking at the kind of Belarus, Russia situation and trying to gauge whether this is a temporary blip or a 5-year blip, and what that could do for your business if those markets kind of come back on tap. So in terms of a defensible strategy from you, what have you got? What would you point us to?
Yeah, I think, I mean, even before the war in Ukraine, I mean, this project has been very, very strong it's a very high margin, very low cost, very impressive economics, no? And that was before the war, and it's going to remain like that in the future. So basically, that puts the cycle. I mean, we are looking at a mine life of 30 years, and hopefully the project is going to be running for 50, 70, 80 years. We will see everything, but you will have a lot of other peers that will be suffering a lot more than this company when we are top margin in the industry. No, I mean, that in general, longer term, but looking at what is going on in Ukraine and in Russia and Belarus, basically, longer term, shorter term things go up and down, but longer term, a lot of projects were meant to be built, looking at the future in the portfolio, in the funnel of projects being built or expansions to be made. The big proportion of that was meant to be in Russia. And we know that hasn't happened. Either the decision has not been made, the financing was not there. So we will be ahead of all of this, and we will have a few years, even if we go through our construction now, compared to many other projects that weren't to be running now and are not going ahead.
Right. Okay. I hear what you're saying in terms of timing and the kind of cost structure as part of the defense. What would you say to investors looking into this project in terms of looking to pick up some shares from you? Potash, not a lot of people understand potash, or what MOP actually is, why it's a good space to invest into. And on top of that, you layer in on top of that the fact that this is a 2.5 year build phase. Why should they jump in now versus just buy their time and wait till you finish constructing this thing? What's going to happen in that 2.5 years?
Well, I think now is a very, let me start looking a bit backwards now. A lot of the big concerns about this company or this project was permitting, like in many other projects, but well, this, no doubt, specifically, and that is behind us. So that is a huge piece of news that that I think still needs to be assimilated. People need really to pinch themselves and realize this is real. No, that is behind us. We are very close to get the financing. It is a lot. I think the team, we start to show the strength of the team, the construction team, but going forward. And longer term, the fundamentals are there. The potash MOP market, again, is probably some confusion with SOP market, a lot bigger, MOP 10 times as big, especially in Australia, which is mostly SOP project, but 10 times as big. And right now going through being Russia and Belarus, number 2 and 3 producers, a big geopolitical move. Europe, no doubt, as well, realizing that European production makes a big difference. When you are in the middle of our project, you go around, we have to push aside some farmers so we can build the mine, we are literally, there are some lamb and sheep right now where we are going to build the plant. So we really will have to, the access to the markets in a commodity like this is a massive plus. We see the gap between European prices and Vancouver prices only increasing, and the traditional for many years gap has been $100 per ton. No? And when our operating cost is less than that, a total operating cost. So that in itself, leaving aside that we are our mineralization a lot more close to surface, what means in terms of being a lot more efficient, and the infrastructure. I mean, when you are in a high volume commodity, the key trouble with a project like those is to build and develop infrastructure. That is not, when we talk about construction, we are not talking about building a port or building a motorway or whatever. That all of that is already there. No? So I think permitting was huge critical point, and now it's behind us. Financing, we are, I mean, with I think the recent support from EMR Tectonic, amazing, getting there, and I think is simply, well, I think a dream for many years that should be coming through pretty soon.
Okay, and just remind me of the numbers around the economics, okay? Because obviously, you know, the pricing is up at the moment, but even if you put a kind of massive discount on that, or maybe even revert back to sort of 2019 prices, this thing makes money for sure. What do your current economic studies say about how quickly you get into cash flow and what that looks like? Because I'm trying to work on a sustaining basis how to value this company. So how can you help me?
So we are, I mean, our economic and the recent, we put at the end of 2022 feasibility study at long-term potash prices. We are making, the company has a value, well, the project, an NPV of 2 billion euros. And basically we are putting an initial capex of 436 million euros in what we call, it is phase one, which is half of the production, 500,000 tons. We will, I mean, once the risk, probably 3 or 4 years, the risk from a technical marketing and financing point of view, going to phase two, adding to 1 million, and we will be with 1 million, we will be generating an EBITDA of ahead of 300 million euros per year. No, so obviously have to go through construction. Is not a small step, but this will be a money machine once you start to get into production and generating and producing 1 million tons of potash in the middle of the market.
Well, I think people are excited to see how you go through the phases and how you get there, and you know when you start throwing off that cash, and more importantly, what you start doing with it. I think dividends will be high on people's minds. Ignacio, I appreciate the update. Congrats on the financing and you know getting all of those finance companies on board. We look forward to seeing how you get on over the next few months.
Very good. No, thanks. That was very good to catch up, Matthew. Cheers.